Bitcoin is got amazing distribution in terms of its ownership around the world. So if you say to yourself, if 50 or 60% of the people that currently own Bitcoin believe it's an asset class, will they continue to buy Bitcoin? Will they continue to hold Bitcoin? Will they recommend it as an allocation in portfolios? If that's the case, then $200,000 is too low for Bitcoin. I mean, something like $500,000 would be there. So, well, Kathy Wood says by 2030.
What does Anthony Scaramucci say?
I don't know. I'm not as smart as Kathy or Michael Saylor. I mean, they would say those numbers fairly quickly, but I would say that that could probably happen in the next 5 to 8 years.
Since May 10th, Bitcoin has entered a phase of consolidation, with prices holding firm above the key psychological threshold of $100,000. The central question now is whether the rally is losing momentum or simply gathering strength for the next leg up. This period of sideways movement echoes previous patterns, particularly the consolidation around $95,000 that preceded a rapid $10,000 surge within just 3 days. After about 11 days of quiet trading, Bitcoin broke out sharply, underscoring how extended consolidation often leads to strong directional moves. Market sentiment remains split. Some indicators suggest bullish continuation, while others hint at potential downside. This tug of war reflects a broader uncertainty among traders and investors. Since hitting a low of $75,000 on April 9th, Bitcoin has seen a strong upward trajectory, largely fueled by activity in the spot market. Along the way, intermittent consolidation phases have provided a foundation for further gains. This stair-step pattern is visible in the cost basis distribution CBD heat map, which shows clusters of Bitcoin purchases at similar price levels over the past 3 months. These accumulation zones have consistently preceded upward moves, culminating in a new all-time high of $104,000. This trend suggests steadily growing demand, reinforcing a bullish long-term outlook. Veteran investor Anthony Scaramucci also weighed in on Bitcoin's future. While optimistic forecasts like Kathy Wood's $500,000 price target by the year 2030 gain attention, Scaramucci offers a more measured view, predicting that it may take 5 to 8 years for Bitcoin to fully realize its potential. So what's next? Will the bulls continue their charge, or are the bears preparing to take control? Watch the latest clips from Anthony Scaramucci's powerful interview for deeper insights. Don't forget to like, subscribe, and turn on notifications for more in-depth crypto coverage. Thanks for tuning in, and enjoy the video.
Are there other assets that you think can have kind of the same growth and success that Bitcoin has had? Because there were times when it was like at $16,000, $8,000 less, and they're like, it'll never hit 50, it'll never hit 60, it'll never hit 100. You saying it'll hit 200, I'm looking at you like, oh, maybe, and I'm not like a market expert on that front. I'm not someone who makes price predictions, but maybe you're right. And maybe you're wrong, but then are there other assets out there where you're like, I think this will actually hit 1,000, 10,000, 100,000 in the long term?
And it's such a great question. So I don't have slides, but if you said to me that, Microsoft was going to go 100 to 1 or Google 80 to 1 or pick whatever the numbers are. If you look at the charts of Google or Microsoft, or they're going from zero ideas in a garage to several $1 trillion, and NVIDIA, I think they formed it at a Denny's table.
It was something,
right?
Yeah.
Right, and now it's a $3 trillion company. If you said to me that those things would happen, they're very improbable things. So
right.
Tesla is an improbable story. SpaceX, an improbable story. So we can't say that these things don't happen, right? We have to say, okay, these things do happen. And then you just have to ask yourself the following question. And then there's a binary move after you answer the question. Is Bitcoin an asset class? Is it an asset class? If the answer is yes, then I believe, therefore, it should trade to the market capitalization of gold. It represents an asset class. That means that a portfolio consultant will go to a large-scale institutional investor and say, you need to allocate to gold. You need to allocate to Bitcoin. NVIDIA, Amazon, these others are investments. They're stock investments. If Bitcoin's not an asset class and it's a collectible, okay, whatever you want to call it, then where it's priced now is probably reasonably to fairly valued, meaning it's going to be in or near the Mag 7 in terms of its market capitalization. And so I've taken the position, rightly or wrongly, and I can back it up, I think, with a lot of color and a lot of commentary, that it is an asset class. And it's very unique in the following respect. It's a global asset. If you look at American companies or the S&P 500, yes, people around the world own them, but they're predominantly owned by Americans. Bitcoin is got amazing distribution in terms of its ownership around the world. So if you say to yourself, if 50 or 60% of the people that currently own Bitcoin believe it's an asset class, will they continue to buy Bitcoin? Will they continue to hold Bitcoin? Will they recommend it as an allocation in portfolios? If that's the case, then $200,000 is too low for Bitcoin. Something like $500,000 would be there. So
when's $500,000?
Well, Kathy Wood says by 2030.
What does Anthony Scaramucci say?
I don't know. I'm not as smart as Kathy or Michael Saylor. I mean, they would say those numbers fairly quickly, but I would say that that could probably happen in the next 5 to 8 years.
The past 9 months have upended the traditional crypto playbook. While Wall Street watched from the sidelines, retail investors seized opportunities. Former President Donald Trump embraced crypto, and Bitcoin solidified its reputation as digital gold. This ongoing tension between Bitcoin as digital gold and its correlation to tech stocks reflects the rhythm of the market cycle. Bitcoin frequently experiences sharp bullish moves followed by periods of consolidation, which often act as springboards for the next rally. Take the recent price action, for example. After the initial surge from $75,000, Bitcoin traded in a narrow range between $83,000 and $85,000. The next upward leg stalled between $92,000 and $96,000. Now, since May 10th, Bitcoin has been oscillating between $101,000 and $105,000, marking yet another phase of consolidation. To break out from this range, the bulls face a significant challenge: a dense wall of sell orders clustered near key resistance levels. Multiple sources have confirmed that more than $50 million in sell orders are positioned at $14,800, with an additional $70 million stacked at $15,000. According to seasoned investor Anthony Scaramucci, this creates a formidable resistance zone that Bitcoin must overcome to chart a path toward new highs. If Bitcoin can clear this barrier, the momentum could shift swiftly, opening the door to the next major move. The ongoing debate around Bitcoin's price trajectory just received a major gold standard upgrade. A fresh wave of analysis now suggests that Bitcoin could realistically reach $220,000 in the year 2025 and potentially soar to $1 million by 2030 if it continues to mirror gold's market behavior. This analysis is based on a power curve model that tracks Bitcoin's value in ounces of gold rather than in inflation-prone fiat currencies. The result? Striking patterns emerge. Each market cycle seems to accelerate Bitcoin's gains, with the current bull run poised to deliver potentially unprecedented returns. As gold flirts with a price of $3,500 per ounce, analysts are watching Bitcoin's characteristically delayed but amplified reaction. One projection shows that if Bitcoin were to capture just half of gold's future market capitalization, its valuation could approach $924,000. It's a compelling case for Bitcoin as digital gold, aligning closely with Anthony Scaramucci's long-term institutional investment thesis. But there's a catch: timing. While proponents of the 4-year cycle anticipate explosive growth in 2025, skeptics remain cautious, pointing to unresolved regulatory questions. This, Scaramucci emphasizes, is the critical hurdle that could either enable or obstruct deeper institutional adoption. Still, momentum is building. Bitcoin is already showing signs of decoupling from traditional financial markets during times of crisis. Its 24/7 global trading makes it more resilient than equities, and the persistent push from Wall Street through ETF proposals that chip away at regulatory resistance is gradually eroding skepticism. The stage may be set for a potential supercycle, Whether Bitcoin reaches $220,000 or even $444,000 this year, one thing is becoming clear. The debate over whether Bitcoin is a legitimate asset class is over. The only question that remains is how quickly traditional finance will recognize what the power curve already suggests, that Bitcoin isn't merely following in gold's footsteps, it's rewriting the rules of value altogether. As we wrap up, we want to hear from you. Do you believe Bitcoin can overtake gold's market cap by the year 2030? Let us know in the comments below. If you found this analysis valuable, be sure to like, share, and subscribe for more content like this. Thanks for watching.